This episode is sponsored by Interactive Brokers. So, will the U.S. Consumer Confidence Index be above 101 in March 2026? At IBKR Forecast Trader, the yes recently priced at 40% and no at 58%, but markets move fast. Forecast contracts let you turn your views into trades on future events like the economy, climate changes, and politics with very, very simple yes or no prediction style contracts. Explore trending data, spot the trends, and if you get your prediction right, you earn $1 per contract at settlement. Plus, you'll earn 3.14% APY on your investment with an interest-like incentive coupon, and you'll get $3 for signing up with IBKR Forecast Trader, which you can use for any purpose or to start trading. Forecast contracts are not suitable for all investors. Go to ibkr.com/forecast and turn your views into IBKR Forecast Trader contracts today. The last trading day for this contract is March 22nd.
The Disciplined Investor is all about you, your money, and the markets. Sit back and get ready for this edition of the Disciplined Investor Podcast.
This episode of The Disciplined Investor is sponsored by Horowitz & Company. If you're looking for a portfolio manager, look no further. Horowitz & Company. From seed through harvest, cultivating financial success.
War and markets, not a great mix. South Korea tumbles the most in history. Inflation risk is real again, and the Fed's quandary is getting worse. And our guest today, Ross Gerber of Gerber Kawasaki. All this and much more on episode number 963 of the Disciplined Investor Podcast. It's always something these days, isn't it? I mean, the good news is that investors, well, they love their stocks. We love stocks. In fact, it doesn't really matter, seemingly, if there's a war or something going on in Mexico, or maybe even an oil embargo, an issue with energy around the world. Yes, the lows of the days held and bounced back extraordinarily on U.S. stocks. And we've seen several days of these crazy moves. Just this week, after the missiles were flying over the Middle East. But generally what we saw, if you look at this, in fact, it looks like the trail of a missile when you look at the actual stock on a bar candle style a chart where you see that the lows were down, these long tails, we call it, and then right back up to the top. Each day that we saw the sell-off this week, there was a little bit of damage done, yes, but not so much. I mean, we're talking about this horrible feeling, this crazy amount of risk, the volatility VIX moving up to 24.5 or 25. And we're talking about 2 to 3% off of the recent highs on most indices in the U.S. Lots of long tails, lots of continued interest in buying. U.S. stocks were the ones, again, that we were looking at. Around the world, a little bit different. Traders picked up buying at the bottoms. No real technicals that were flashing any signals. Just price action, at least as I see it. It was all this, oh my God, it's down so much, let's buy. It wasn't like, oh, it hit the 50-day moving average and bounced. Or the 200, the 150, the 100. Or it wasn't like, oh, the MACD was showing that a divergence into the upside should be played, or maybe the R squared, or the stochastics, or the Bollinger Bands, or whatever you want to say. The fact is that it was all about, boy, this looks like it's really sold off a lot. I'm going to buy in now. Kind of interesting. But some things were decisively sold. I got to tell you something. When we look at, for example, wow, the Kospi, Korean stock market. Now remember something. This market was up about 150% or so last year, which is an extraordinary number for a developed nation. You don't usually see something like that unless it's Venezuela that has inflation at 1,000% per year. The Kospi last year was the epicenter of the tech trade. the opportunity for a very small market capitalized index to gather and garner all sorts of money in and interest, thereby pushing it up dramatically. Then the momentum traders took over and it was off to the races. Followed through this year with another 50% increase in the first 2 months of this year until all of a sudden there was a sell-off that was due to what? Well, the Middle East conflict. It was kind of interesting what happened here. We had a few historic days. One day, I think it was on Wednesday, 12% drop for the market, numerous market halts. And why was that? Well, we had an overbought, a fundamentally overdone, kind of a over the skis kind of situation. And once there was a hiccup with investors who probably had an incredible amount of margin leverage in that market, they said, the hell with this, I'm out. And because, again, small capitalized markets and a lot of money moving in, moving out, it was exacerbated because of a lot of different things. One of the problems is that many countries like South Korea really doesn't have oil. They're reliant on others. And who are they reliant on? Well, in this case, it's places like the Middle East, Iran, etc. And when you see that they are freaking out because of a potential energy emergency, things go a little crazy. And then you add to that the excessive margin that's on the account and the leverage in the system and the momentum players falling over each other, trying to get in and now trying to get out. There's people that are left, hanging dry. The rug was pulled. India is another example of a market that does an incredible amount of reliance externally for oil. And by the way, if you didn't see it, there was something else that happened. Europe is now in a pickle. The problem is that in Qatar, one of the largest liquid natural gas LNG producers and exporters, about 20% of the world's LNG is shut down because of the bombings, etc. And that is causing a major crimp, and it's still wintertime. We're starting to work into spring here. I know it's the beginning of March, but we're working into spring, but yet still winter, still cold, still use of heating fuels, of natural gas, of course, for factories and other things like that, but also for heating. That price skyrocketed. The LNG price and heating oil, we saw LNG prices go up 60% in one day. I'm talking about European natural gas, the natural gas on their markets. So that's a big story. The Straits of Hormuz is closed, and even with the backdrop, the promises of President Trump offering insurance and maybe even Navy escorts through the Straits of Hormuz, there's a lot of concern that we're going to see oil rising in price. And what's interesting is that oil did already rise in price, but it wasn't, it's not that big of a deal. It's just not that big of a deal. We didn't see oil really skyrocket. There was some concern about a $20 move. It moved I don't know, the range was $15, $14. Still not in a place that's, above 80. It's not above 80. It's fine right now. And with that in mind, the concern that everybody had about this huge increase, it's not happening at the moment. At the moment, things can change. There's some reports midweek that talked about how Iran may be out of their missile capability. Then what? They're going to be left all alone. They have drones, but then they're sitting there. They pissed off everybody in the region. And who knows how fast this thing's going to shut down, especially if there's no government, no leadership, no ability to really coordinate any of this, which is, that was the goal, right? That was the goal, to cut the head off the serpent and to reestablish what's going on there and have basically a regime change that can be much more friendly, and we'll see how that goes. This is a little bit different because there's a lot of religious issues going on with this. It's not just simply a leader that's a strong man. This is a religious cleric, the holy that was taken out, and due to Sharia law and the way that they work there, it's a little bit of a different environment. But like I said, not easy to point out, but basically, we could all say there's a lot going on. And rightfully so, volatility measures are heightened, but there's a lot of opportunity. Don't forget that. A lot of opportunity on all sides of this trade. Whether it's the short side, the long side, a lot of opportunity. I'm going to say it again because I don't want you to forget it. I want you to recognize that this is not about fear and freaking out. We had some people call us last week, wondering about this, and nobody was freaking out or were worried to a point that they were, like, oh my God, I got to do something bad. But, people naturally get concerned, upset about this. Now, it also depends on how long you've been investing. If you're new to investing, you're probably a lot more worried, concerned about what's going on. If you're an old hat at it, you've seen that wars in particular are those things that initially are shocks to the system, but then we get used to it. And that takes some time, and hopefully we're not going to go that long with this particular conflict. But if we do, that's the progression. Unless something comes home on our turf. But the crazy thing that you have to understand about war is that war in its perverse way is actually good economically in some degrees. Clearly, even if you are the recipient of the bombs, it may not be good for you and, of course, you as a person. But the rebuild process is actually economically positive. Think about that. The act of actually getting and having bombs built, munitions generated, manufactured, and then the rubble cleared and then rebuilt. All that is an economic benefit to various parties. Something just to think about, as horrible as that may sound. We're going to end there on this note because I want to spend a lot of time with our guest today, and he's a great one and someone who I really respect. Call a friend and who is a good friend of the show. Before we do so, I want to talk about Interactive Brokers again because, it's March, right? Tax season. That's where we're at. We're in that zone. And this is a good time to meet portfolio analyst from Interactive Brokers. The free all-in-one dashboard that lets you consolidate, track, and analyze all your financial accounts in one place. You don't need to have an IBKR account to use it either. Just connect your accounts and see your complete financial picture, your investments, performance, and allocation, all in one single screen. Plan smarter with IBKR's new tax and retirement planners too. These are built around your goals and market assumptions. Get deep portfolio insights with detailed risk assessments and compare performance against more than 300 benchmarks. Plus, manage with confidence thanks to GIPS. These are verified returns that you can review and benchmark against. Sign up for the free portfolio analyst at ibkr.com/free PA. Now, let me tell you about our guest real quick, and then we'll bring him on. He's waiting in the wings. It's Ross Gerber. He's co-founder and president and CEO of Gerber Kawasaki Wealth and Investment Management. He oversees Gerber Kawasaki's corporate and investment management operations, as well as serves individual clients. He's become one of the most followed investors on social and on traditional media. His investment ideas and advice have made him a regular in business news and is featured on CNN, CNBC, Fox, Bloomberg, Reuters, you name it, he's been there. He received a BA in communications from the Annenberg School at the University of Pennsylvania with a concentration in business law at the Wharton School of Business. He also completed a second concentration in classical music studies and attended the Grove School of Music, which we're going to talk about. I have some questions for him. Let's bring him on right now. Ross Gerber, how are you? It's been a while.
I'm pretty good. It's been definitely a different week than I would have predicted a month ago, but I'm pretty happy about the success we've been having. So,
It's interesting. Your next week is going to be much different than the week you would have predicted just this week.
Right. And I think that we're sort of entering a new stage of, in some ways, history that is pretty, uncertain what that will look like, a year from now.
Yeah. I want to talk about some of your personal stuff first, do a little warm up, let people know a little bit more about who you are. So we know that you're a musician. You played guitar. You play guitar. And who was, I think I know this answer, but who was your earliest musical inspiration that really set the stage for, I want to do that?
Well, the real story is a little bit, unique in that I had an experience when I was 16. And in that experience, it involved seeing the Woodstock Jimi Hendrix performance on video around 2 a.m. And during that experience, I decided that I could not live my life without actually playing music, playing guitar, and playing Jimi Hendrix. So my original inspiration was certainly Jimi Hendrix, and still is to this day. And my son's name is Jimmy, spelled Jimi.
Look at that. Now let's go back also and talk about the early days of your music. You played with the first band you played with was Third Eye, and you played weekly.
You're digging deep.
What's that?
You're digging deep.
I got some deep stuff here. You played. You played in college. You played a place which was often, to this day, referred to as the Penstitution, the iconic Smokey Joe's. You had a weekly gig, right?
That's right. And I love Smokey Joe's. And, I was back there about 5 years ago, and Paul Ryan still runs it. And I walk in there, and I haven't seen him in a long time. And I was like, I'm so-and-so. And he was like, oh my God, how you doing? You want to play tonight? I was like, really?
Right. You have like a certain memory of that spot? Did you have something?
I have 1,000 memories. I learned so much playing music in Philadelphia for guys like Paul and the Irish guys that ran the bars over there and still run the bars over there. And I learned life lessons that a kid who grew up in Bel Air could never learn in Bel Air.
I love it. I love it. Now you're with the Danger Band. That's been your band for years.
Well, no, that ended
when did you end
with COVID.
Oh, it
did? Unfortunately, when COVID hit, we were sort of at a high. I had just started a new music company too called Cocoon. So we were like, we rented a house in Malibu, turned it into a studio. It was like amazing. The end of 2019 was like an amazing time in my music career, just like building stuff in my band, and all this was like coming together. And then COVID hit. And when COVID hit, it was really detrimental to the music industry, obviously. And unfortunately, one of my band members committed suicide, and it was a very, really, really hard thing to deal with in April of 2020. Tracy, rest in peace. And so since then, I've played live twice. And one time I was lucky enough to play with Cisco Adler, who's a famous artist, and his band. And of course, they make me sound really good. And that was super fun. And I played live once, several years back. But I'm looking to start doing this again, as soon as time allows. I still play every day almost in practice.
That's great.
Yeah, playing live is wonderful. And so I'm kind of trying to figure out a different way to do it. So I kind of, when I built my new office, it's kind of partially a venue.
Yeah, that's great. Well, if you need anybody in the band, I could do. By the way, I'm a hell of a triangle and tambourine guy.
Well, tambourine has a role. I don't know about the triangle.
Yeah, I know.
Music, but we can work with a tambourine.
All right, let's talk about. I want to talk about. I have certain things that I put together for our discussion here because I know we can go into a lot of areas, and I want to talk about AI, the revolution, the broader text landscape, and you've been bullish on NVIDIA's dominance in the AI space, right? We know that.
Well, yeah, I've been bullish on NVIDIA since I was a little kid.
Right, exactly. Since before NVIDIA even knew they were NVIDIA.
That's right. Well, they did know then.
Well, no, they knew
just about video games.
Well, video games. They were second fiddle, my friend, by a long shot.
For who?
Then. No, come on. To the on the motherboard, it was like, what chip do you want? It was Intel.
Well, right. That's true.
That's what I'm saying.
But we used to use PlayStations and Xboxes or whatever. And the NVIDIA PC route was sort of a different gamer route than the console route, which I was kind of a console guy. So it was actually at E3. I was telling my kids about E3 because they don't do that anymore. And it used to be just an amazing experience to go, and that's where I learned about NVIDIA because they pulled me aside and I said, listen, I'm not interested in chips. I'm interested in games. So the guy goes, no, let me show you because this is going to make games way better. And that's when I invested in NVIDIA. So this was a long time ago. And this was before crypto and everything else that got it really going. And then through Tesla was really when I started understanding where GPUs fit in the autonomy or ultimately what we call the AI equation now. And it was through GPUs. This was now about 10 years ago at CES when Jensen did his presentation. It was like a big epiphany for us, and we put millions of dollars into NVIDIA then. in 2016, and that was about a decade ago, and it's been just a wildly successful investment.
Cost base is zero. So that's awesome.
Yeah, it's like one. It's like
exactly.
$1 or $2. Yeah.
So you recently had a CNN appearance. I think it was like 2 weeks ago or a week and a half ago, and you talked about the AI trade. You highlighted NVIDIA's strength. Here's my question though. And I think as a matter of fact, NVIDIA came out this week and talked about that they think that last 30 bill with the B is the last time they're going to invest in OpenAI, which I want to get into that discussion in a minute. But do you see any risks in any of this AI discussion? Like, for example, energy constraints, or maybe like with what's going on with Anthropic, it's not totally out there yet, but with Anthropic, with the government, with regulation, over investment. I don't know. Something? Is there something that's concerning?
Well, my basic premise right now is everybody's concerned about the CapEx spend, and I don't think they're going to be able to deploy it all that rapidly. So that's my concern, which I think was the first thing you said, which was around infrastructure. Right. And infrastructure in the United States, especially around electricity, is pretty old and poor. And so just the idea that we're going to just like rapidly ramp up energy is not that simple or easy to do. And it's quite expensive to fix and upgrade electrical infrastructure. And so we're in this period of time where electric prices are going up. Here in LA, it was like a 20% increase in electric prices just this year. And it's a big hit. Like I was like, wow, this is a big difference what we're paying per kilowatt hour than what I was paying. So it went from 25 cents to 30 cents. And I was like, wow, like that, like the demand for electricity is huge, but the supply and the ability to ramp this supply is not that easy, and it's quite hard to deploy. So my basic thing is you're in this race to meet the demand for inference and, for AI. And yet, these companies are going to struggle to be profitable because they're going to want to deploy the infrastructure and do all this as rapidly as possible. And it's very expensive to do it this way. So I think that the profits for AI will be more driven in industries like mine, where we can get immediate efficiencies from using AI that are profitable from like day one, versus the actual AI companies, which have a lot of investment to do before they profit. But I think in 5 years, they'll be wildly profitable.
Yeah, but the problem we have right now is that, just stick on the energy issue for a second here, and you talk about the infrastructure build and the amount of money that we're talking about from the hyperscalers that are giving. And again, I want to save this because I have a different part of this discussion about circular and vendor financing. But
right.
I have I've been on this bandwagon for a while. And I can't get off it. Somebody should talk me off of it, but I can't get anybody.
I'm going to try to talk you off of it today.
Good. Yeah. But so, you talk about this energy situation. Recently, we saw that there's this thing where data centers, hyperscalers are going to need to supply their own energy, right? We were all hoping for this SMR, the small modular reactors, that whole thing with Oklo, Nuclear Scale. I mean, who knows how long that's going to take, if it's going to take.
5 years to 10 years.
5 years to 10 years, right. So everybody was investing. That was a big thing. Talk about the markets, going in advance of things. But where are we going to get the energy to do all this?
We don't have it.
So how does that work? So how does that work then?
So how it works is, how do I rapidly deploy new energy? Okay. What Elon did was he just bought a bunch of turbines in Memphis, lied to the government, told them they were temporary, and just been running them all full bore all day long. And it's real bad for the environment, So just running like gas turbines, to make energy, it pollutes. And so there's a lot of rules. Now in Texas, there aren't. So you can do these kind of things.
Which is where they moved to, by the way.
Right, exactly. Yeah. But in California, you're not doing anything like that. So the first question is like, how do we increase energy supply rapidly? And the best way to do that is through solar deployment and battery systems. So solar is the cheapest way to get energy quickest with battery systems. So we really like that business, especially battery
the market
storage.
Doesn't like that business, though. Let's be honest. The market's not
I don't
thrilled.
care what the market likes.
I'm just saying.
I know what.
Just saying from a stock
I know how
standpoint.
it works. Right. But like, renewable energy needs battery systems to really get the most efficiency out of it. And battery systems with renewable energy have proven to be the lowest cost, best source of energy. So if we really want to do stuff, we've got to just go all in and start, really deploying things like solar rapidly. And we can. We have the ability to do this. So I think it's just about investment. The second side of it, which I think is harder, is the actual transmission lines and the actual infrastructure. This is a whole nother level of difficulty than just putting up solar panels, capturing energy and putting it in a battery or whatever. Now I got to build transmission lines that take this to the place. So if I build my own power around my data center, and then it's a pretty simple process, but that has to be put into the economics of building the data center, which is now I have to build a whole new energy source and transmission for each data center. How much more does it cost to do this? So that's why I say it's going to take more time to deploy the infrastructure than people will want to accept, because there's a lot of like things that have to be done. And then when you go to the city or the county and you say, I want to add my own energy infrastructure here, it's, you got to deal with politicians, which means nothing happens fast.
And the problem you also have, Ross, tell me if I'm wrong about this, is that the energy consumption that we have right now with, we'll call it AI 1.0 conceptually, right? Then moving into inference and then moving into agentic is a whole different, it's not just a 1, 2, 3. It's a whole different level of consumption. It's
already like maxed, like we're using Claude a lot here at work, and like, it'll be like, okay, you've maxed out your usage today. And it's like, how much more can we pay? And then it was down the other day because there's just so much demand, and they have to like kind of limit how many tokens you're using. And, a token is kind of like a word. And so like the more questions you ask AI and the more it spits out more data, it costs money. And so they're undercharging for this product right now to get everybody to sign up, charging $20 a month. Netflix costs more money and does a lot less for me than AI.
You've talked about this. You've talked about like, Grok and Claude and Grok and name the it doesn't matter. The other ones we talk about, they're not going to stay cheap forever, right? So right now I'm paying $30 a month for Copilot. Now I know Copilot is the least good of all. It's the least, but it does a good job for things like, grammar check this, rewrite this sentence, make sure this email looks good.
You don't have to like cut and paste.
Right. Or look up, find information on this client's information in my work side. That's all in there. But do we think that the differential between pricing, where you have AI models and the AI companies that are the open, quote unquote, open source, right? And the for the good of mankind versus the business-based ones, those two competing forces these days, which everybody's starting to move much more towards the other side, forget about the good of mankind. Is this going to start costing us a lot more?
I don't think it's going to be right away, but yeah, for sure. And people will pay a lot more, but you have to look at it like as a cost benefit, like how much am I willing to spend to get huge efficiencies in my business and, not have to hire employees that we were going to hire. So if you just don't hire one employee because of AI, let's say that's saving you $100,000 a year right there. So like, wouldn't you pay $2,000 a month for Claude, and people will, and that's what's going to be, and so companies will pay a lot more than individuals. I think there'll be free versions of these things, obviously, that'll be like ad supported, and then there'll be like the $30 or $50 or however many like tokens you're really using, so it'll be based off usage, because it's kind of like when the internet started and AOL used to charge, $29.99 a month, and so that they needed to do that. And when AOL said, okay, we're not going to charge anymore, it was down, like the demand.
I never understood that. I never understood that whole thing.
The idea was to get everybody on the internet. Like it was just get everybody on the internet. So if we do, like, as soon as we could afford to like just not charge, it was better to get scale. And AOL was the biggest, remember, Time Warner of all people.
Of course.
Of course. And so I was there, 99, top of the market, AOL Time Warner. That's why I was like, don't buy Time Warner, Netflix, please don't. It's like a curse,
So when it comes to this AI jobs cannibalism, if you will, to a point, there's been a lot of discussion I've heard. It's almost, I've been saying that it's he who protests too much. This whole idea out of everybody's mouth that no, we're not building this to replace employees. But meanwhile, it seems like the it's happening. Look what happened with
no,
Block.
we are building this to replace employees or not hire them in the first place.
Correct.
Right.
Isn't that the truth? What is the bullshit
But
that all these guys
who? The question is which employees.
Right.
And that's where I think a lot of people are making a whole big deal about the fact that this is about efficiency. See, what I'm telling my team is you better learn this. I tweeted this the other day. I direct all members of my team to work on Claude immediately. I don't care what you do, just get on it, and like the idea is we can become super advisors by having AI agents helping us do all of our work. And we do a lot of like behind the scenes work, let's say building a financial plan. And now with AI, we'll be able to, we've already built platforms on Claude that are super awesome.
Right.
Right. So we're just trying to figure out how to deploy this across the company because like you literally can't even share the documents or save data, So we've got like templates that we've built that are amazing already and better than the stuff that these companies that charge us $10,000 a month for, we don't need to pay anymore. So when you're talking about employees, well, certainly if you're in what I call real work, like construction, electrical, putting in, electrical infrastructure, AI can't do that.
Right.
When you're
mechanical.
Yeah. And you're thinking about like a lot of jobs you physically have to exist to do those jobs. Right. And then you have this whole, so this is what I was saying the other day. The generation that's graduated from college over the last decade, their degrees are worth substantially less than ours. Okay. Right. So the education system has gone down the gutter of tube of shit. Okay. And what it's become is some sort of consensus building, woke, weird thing where you don't even learn the history that's actually the history anymore. Like it's the least prepared college educated people that have ever been produced by the colleges, let's say. And so now they're graduating and they're all these entitled kids who think that Facebook is everything or Instagram and that they spend half their day wasted, high, just like playing on their social medias. And then they go get a job, which is basically like, how can I fuck around as much as possible and look like I'm working? And then they post this stuff online, which is even funnier. And those are the people losing their jobs and they'll never get jobs again because, if you don't really have a skill, you're screwed because of AI. So all these kind of cushy jobs at Meta. Look at what happened at Block the other day. And they go, well, 50%. Block's not doing well. Block's not doing well. So maybe it was just layoffs. I go, that's absolutely true. They have literally thousands of people who do nothing there, and how did it get that way? Because we just hire and we hire and we hire and companies get big and they don't even realize that half the people don't actually do anything every day. And so it's going to be a tough time for college educated younger people who don't actually have real skill sets and actually didn't really learn anything of value in college.
Right. This is the story that I've always had, that if you don't know how to add and subtract, multiply and divide and understand the basics, how you can actually use that powerful Excel to its fullest. If you don't understand what an average difference between a median, mean, or whatever, pick whatever.
How about if you don't understand why we're fighting in Iran right now, you should be like going back to school.
Right. Well, right.
You missed history. You just missed history.
Exactly.
Well,
let's talk about that. Let's talk about that. You've been pretty vocal about the ongoing conflict there.
I'm pretty excited.
We see this market destabilization, energy spikes.
I like it.
It's good. You like it. What part of it?
I love it.
You like the word
I want to buy stocks. Yeah. I want to buy stocks because when this is over, the world has changed so much for the better. There is nothing more concerning to our future than a nuclear armed Iran.
Right.
Okay.
I agree.
And honestly, it's not an opinion. It's just a fact. You know what I'm saying? I'm not trying to say this. I'm just saying that if they had a nuclear weapon right now, they would be using it. That's why we cannot let this happen. And we've played this game with them for 20 plus years while they've attacked us and terrorized us and supported.
Lied.
I mean, it's just a million things. They played this game and they were building a weapon. Okay. I don't care what kind of propaganda nonsense you're reading online. They're building weapons. They have the ability to highly enrich uranium and they just don't give a crap about the West. And they are trying to arm up to destroy our civilization. That's a reality. Okay. Then the Ukraine war starts, and they're the first people to help Russia massacre our Ukrainian brothers and sisters left and right. Okay. And so, then who do you think was behind October 7th? So the Arab world wants to end all this nonsense, and Israel and Saudi Arabia start talking, and then they unleash this Hamas attack on Israel, which just changed everything, and whether Iran realized it when they unleashed October 7th that it was going to be their undoing, I'm sure they did not think that in the end, Netanyahu and the Jews would destroy them. They probably didn't. They did the old Sun Tzu era of underestimating their enemy of 5,000 years on Purim, nonetheless. Yeah. Okay.
Yeah.
They didn't even read the story of Purim. Okay. Which is about them.
Yeah. It's amazing.
So today we actually sunk a ship with a torpedo, an Iranian Navy vessel. I was cheering. They have no Navy, they have no Air Force, and we are just systematically taking apart their entire military apparatus that have killed tens and thousands of their own people in the most harsh and horrible ways. So how is the world not a better place today than it was 2 weeks ago?
Yeah, I want to also talk about, though, the traditional war footing when it comes to markets for a second, because there are, I think there's 3 phases, give or take. I mean, we could probably talk about this and argue about this, but there's this, the initial, right? The shock. This is why things are done on the weekend. So they let it sink in a little bit, right? This is purposeful.
Give them a few days.
Give a couple
Maybe
of days.
End by Sunday night.
Sunday night at about 5:58 would be very nice Eastern time, right before futures open. And you get that shock. Then you get that kind of adjustment. This is the old frog boiling in a pot, right? Then you get this normalization that, okay, we're in a war. We've been in a war forever. Who cares? It's over there. The only time it really gets crazy is if I got a bomb blowing up on my doorstep. Other than that, it's over there.
Which is next, by the way,
Well,
here in LA.
You're closer.
No, I mean, I'm not kidding. I'm not kidding.
Oh.
The Persian community here in LA is so happy. I've never seen anything like it. They're dancing in the streets. I have
Persian friends also, and they're like,
and I'm telling you, it's a risk that they're going to attack us here in Los Angeles. Between the Jewish community, the Iranian Jewish community, and the Persian community, that's just everybody here. LA is so happy right now. I can't even tell you. You know what I mean? And everybody, so we're a target. So it's kind of what I told my kids. I gave my kid, I don't let him have the phone, and he's 13. I gave him the phone. I said, listen, if shit goes down, I want you having the phone because shit's going to go down. I'm just, when they get desperate enough, they will attack. And so I think Americans need to not be complacent at this period of time. We're at war, and many of the young people today don't remember the wars that we've been fighting for the last 55 years that I've been alive. And so, I'm prepared. You got to, Americans need to watch out for each other right now. We got to be smart.
Let's talk about, though, what mistakes people make when wars happen when it comes to markets. Like we saw, for example, the first few days.
Right?
Yeah, they panic. They get upset because we don't know. There's a lot of uncertainty. Is this just the same uncertainty curve as any uncertainty curve? Tariff uncertainty, new political thing,
This with Trump, there's uncertainties that you can't quantify, which I think market participants don't like. But if you would have told me that the market really isn't down from all this, I would have said zero chance. I Monday morning, I had my combat gear on, ready to deal with clients in panic mode. You know what I mean?
Yeah.
So I've done this pony. That's why people pay me. I'm the guy you want in your bunker. You know what I mean? When the markets are getting killed, I've been there, done that. I'll get you through it. So my wife just doesn't understand these things. She doesn't pay attention to the news and stuff. And she's trying to act like everything's normal. I looked at her and said, we just started a war. Okay. In my business, that means we're included,
Right.
And so I'm not the same today as I was yesterday. I have to deal with some potentially really difficult things right now. So please be supportive, you know, and so, and just understand the stress I'm under, because I warn my family, because my job most of the time is not too bad, but these kind of times can be tough.
But what you're saying is you were surprised. You were surprised.
I'm surprised. I think the market should be down 5%, maybe 10.
Right.
But when I thought from a like a rational perspective of like, what is the potential outcomes and how good or bad are they? I was like, dude, we got them all the first night.
Right.
Okay.
Right.
So when I started extrapolating out 6 months from now, to me, there's the potential that this could be one of the greatest paradigm shifts in modern American history. Like eliminating the Iranian regime threat, which ultimately neuters the Russian regime threat, maybe ends the Ukrainian war. And oh my God, this would be wildly bullish. And so that's why I'm saying if it goes down, I'm a buyer hardcore because I think we're going to win this war. I think Iran is just, I think they're done.
Yeah.
I think the people want to be free. And if we can give them a window to somehow take over their country, it'll be messy and it'll be messy for a long time, but there's an opportunity to rejigger the world into a much better world order for everybody. And like the Middle East could become one of the wealthiest trading areas in the world. And I venture to guess that the Persian community, if they come back to their country and rebuild it, will build an amazing country. I'm hopeful.
Yeah. Let's pivot to another hopeful area. Let's talk about SpaceX, XAI. We'll talk about.
Yeah,
I knew that he was going to start combining those things. That was like
I'm glad.
Yeah.
I got out of my Twitter investment and now I own SpaceX. Right. That's the best outcome I could have asked for.
Yep. So
because I got screwed.
Well, but listen. I think the valuation of what is it now? When Twitter got folded in, when Twitter got folded into XAI, the number that came up was like this pie in the sky number of what Twitter was worth. Let's be honest. But,
it started with 44 billion for Twitter, right? Then they merged it with XAI and they said it was 110 billion.
Right.
Then they merged it with SpaceX and they said it was worth 250 billion.
Right. And then what do you say it's worth now?
Now they're saying it's worth more. I don't know.
It says some crazy number. So
yeah,
you were very against Musk dabbling in his governmental duties of the Doge, Coca-Cola and all that. And you were right.
That worked out well, didn't it?
Yeah, that was that whole thing was ridiculous. I mean, it was a game.
And Christine Noem is flying around on a private jet with her own bed and sleeping with the special government employee and giving her friends $150 million contracts right under Elon's nose. Yep. You got to love that.
The whole thing was bad. So,
or Elon.
Are you, first of all, do you think that Tesla's going to become another division of X eventually? Of XAI, SpaceX, or whatever you want to call it at that point?
It'll be part of X. X will be the company and it'll be multiple verticals of the future, basically. And at this point now, I think that Elon's a little bit frustrated because he wanted to get this thing out public and now we got a war. It's very hard to take companies public, during conflict. And so it makes a lot of sense for Tesla and SpaceX to merge. They're basically worth the same amount of money. And then it's like they could go public through this reverse merger process kind of thing.
And if they do that, does he then get the benefit of the valuation benchmark to give him the quadrillion dollars that he was now having in his new contract? Or is that something different?
I don't know. I don't know how that would affect the goals that were set for the new contract. And my assumption is that goals are goals. And so you still have to achieve those goals to achieve the pay. At this point, I don't know how many goals they're going to achieve. So, I don't know. I was just actually at the Tesla dealer taking my car in and there's cars everywhere and these people are working their butts off and Tesla makes great vehicles and they pretty much can drive themselves. And I just think that moving away from the vehicle sales business is a death blow to Tesla.
Their vehicle sales stink.
It stinks because they don't want to sell. They don't care.
Well, they're not
like Elon's not trying to sell cars. He is basically saying, you're going to take my cabs and we're going to build these robots and we'll sell cars too, but I don't care. I'm going to end the Model S, the best car. Every time I go over to the Tesla, I can't believe
that's the only Tesla I would buy, by the way.
It's the best car they made.
Yeah.
The Model S Plaid with full self-driving is the best vehicle that's ever been made, and they discontinued it. And over this fluffy lie that putting a robot line in Fremont makes any sense at all. Because we all know if you've ever been to Fremont, you're not putting a robot line there. It's a mess over there. Okay.
Yeah. So then the valuation of where Tesla is and the price it is in the market currently is really a factor, not of anything to do with Tesla, really. It's just a hope for roll up into
hope for the future.
That's
when
it.
I talk to my Tesla clients that won't sell their shares, and I approach it very delicately because they love Elon and Tesla. And I say, look, what do you think of the Model S being discontinued? And, they have this big dissonance that they're having a trouble with. But what they've bought into is that this future abundance with robots and cabs is the future of Tesla. And they're fine. They don't care about selling cars anymore. That's what I'm saying. They just don't care about selling cars. And that is, you have a $100 billion revenue business that was doing $15 billion a year in profit and probably worth, $300 to $400 billion, right?
Yeah.
And they're going to abandon it. So I don't know what happens, but I know nobody's buying Teslas right now.
So when you look at what they're trying to do, the Optimus ambitions and this whole issue with, I don't know whether it's a scene from Sleeper. I kind of keep envisioning this scene from Sleeper with the robots, with Woody Allen with his little orb.
Yeah.
And the
I just go straight to like RoboCop.
Yeah, RoboCop. Yeah, that too. And that was L.A. That was in L.A. Where do you see the limitations, the boundaries, the potential for adoption for this whole thing? And are we ready for this?
First of all, getting a robot to work is really hard and to work for a long time, So let's be real. We've got some time here before I use the example all the time of my hands, because I'm a guitar player, the complexity of your hands and calluses and playing a musical instrument, and the dexterity that humans have developed over millions of years of evolution is not that easy for them to build. And Elon will tell you that himself. And then you got eyes and you got feet. So it turns out eyes, feet, and hands make humans super unique as animals. So we're animals, and animals adapt to millions of years of different challenges, and the animals that don't adapt die, and the stronger ones survive. And we've evolved over millions of years. And most species, if you drop a human into Africa right now, humans would get eaten very quickly, and we're not adept to survive in the wild anymore. We're domesticated animals now, like a cat. And so when you think about this idea that we're going to just replace ourselves with these metal robots that think and need power, and you look at some of the incredible feats that humans do on a day-to-day basis, like that dude who just climbed that building. That's unbelievable. Don't underestimate the humans is what I say.
Right. So
I'll bet on the humans over the robots for a long time. But now, because of what I'm reading in the military circles, what I actually believe is Tesla will be a military contractor.
That's interesting. Both on the AI side and the robotic side?
SpaceX, Tesla, robotics, AI,
SpaceX,
Grok,
and
all of it.
He likes. He always likes
building
that.
an army. He's building the U.S. Army.
But isn't that what the game he always played was to go after the highly profitable and very squishy government budgets? Well,
there's that. I mean, Elon's been doing that since he started.
That's what I'm saying.
And then there's the Iron Man model that he kind of buys into of like, I'm creating technologies to protect America from its adversaries. And there's no question that Starlink has been a major factor in the conflicts that we're seeing today. And so for the first time in history, we launched a drone attack using Starlink antennas in the back of the drones that we can now drive directly to the target from anywhere in the world. This is a game changer technology when it comes to the modern combat and warfare that we're seeing in the battlefield today. And then when you extrapolate out robotics and what Tesla is building and Cybertrucks, and all of a sudden you've got an army of drones, robots, and autonomous vehicles that could be extremely effective against our adversaries. So I think that argument is probably a better argument than any human wanting some stupid metal robot in their house.
I would agree with that. And then, obviously, there's a long, as you said, a long way. Now, what about the cyber cab? or the robotaxi? Which is it? Is it cybercab or robotaxi?
I call them all robotaxis, because certainly Tesla's not the only one. And I'm a Waymo user. And, one of the advantages you get about living in Santa Monica is you see all the technologies before everybody else and you see them compete. And that's how we found Tesla, was because they were here in Santa Monica. And so the fact that robotaxis aren't even operating in Santa Monica currently just shows you how behind they are.
Right.
Because, they're operating in San Francisco supposedly and basically Austin, but they're not robotaxis. They're driven by drivers on full self-driving, essentially. Mm-hmm. So it's no different than an Uber driver who uses full self-driving. You see what I'm saying?
Right.
And so the promises have become a joke at this point, because by the end of the year, the people who are supposed to be out of the cars, they're not out of the cars. And there's a reason why they're not out of the cars, because the cars will kill people. And so we need the safety drivers. And I use full self-driving, extensively all the time. I think that the software is better than it's ever been. I think it works really, really well. I just went to San Diego and back, and I had to disengage several times in that trip for safety reasons. And a lot of that had to do with things that are super random that just happened. Mm-hmm. Like there was a motorcycle accident in the middle of the freeway that we drove right up on. Cars were like all over the place. People were out in the freeway trying to help this guy who was hurt. It was a tough driving situation. Well, humans can communicate with each other in the car. This is another thing that, cabs can't do with robots. It's like you wave at the person, you look at them, right, so you don't hit each other. Right, you know what I mean?
Yeah, yeah. And or you see where they're looking. You see where they're looking. Well,
we had to navigate around all this mess, right. And so, fortunately I was one of the first person, because the traffic, was going to be a nightmare for the rest of the day. But, and I almost had to stop to help these people, but there was already somebody doing that. So, but that said, self-driving didn't know what to do. You know what I'm saying? Mm-hmm. And so you just have to disengage, and so there's a lot of scenarios now that happen in LA driving that are non-quantifiable because it's LA. And so this is what's made it very, very hard for full self-driving to work. Now, Waymo's solution, which turned out to work, is just put like tons of sensors everywhere so that we can really measure everything. And the cars don't look as good, but they work and they're safe because we know everything around us, how far it is, how fast it's going, and we're safe. So, I think there's something to Tesla just like putting some sensors on the car and fixing their problem and moving on. But, they're just too stubborn.
Let's talk about this, getting me off of the edge of the ledge here, and talk about this whole idea where we've seen these hyperscalers, right? We've seen Amazon and Alphabet and Meta, Microsoft, NVIDIA. Well, they're not hyperscalers, but NVIDIA. All these guys spending in your lifetime. I'm telling you, and you're going to agree with me. You've never seen spend like this. The spend is absurd. The numbers are. The numbers are absurd. They dwarf any, I think, any stimulus package that has ever been given out by a government over time.
Oh, come on. Biden was sending checks to everybody. It was like $1 trillion.
Yeah. Okay. Yeah. They're changing this government's going to be changing the San Andreas Fault name. Did you know that? That's going to be
to what?
To Biden's Fault. Yeah. So
I fell for that joke.
Yeah, sorry.
You got me, but that was funny.
So this whole spend,
they should do that.
this whole spend that we've been hearing about, and the numbers just go on and on. And
right,
you're telling me that when NVIDIA gives money to OpenAI, and OpenAI then turns around and buys NVIDIA chips, or Microsoft to OpenAI, and OpenAI buys cloud service, blah, 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 blah. This is not some kind of weird deal where brilliantly you take money off your balance sheet and you turn it into income, and then you boost your EPS, and then your stock goes up.
This is like what everybody does. This is what everybody does.
This is profound,
okay? Though. No, it's common in business. So now you got to share the wealth, like NVIDIA can't just make $43 billion in a quarter and just like distribute it to their shareholders. Like they have customers that are spending all this money and they want to own a piece of all these people. And if they're going to spend the money with them anyways, why not give some of it back to these guys and own a piece of all of it? Well, and that's what NVIDIA is smart.
But when you get a piece of it and you get like a deal with AMD, right, where AMD is going to deploy 6 gigawatts of this GPUs over time, blah, blah, blah. They're going to get this money. They're going to pay for it. And then they're going to get 10% of AMD Meta. You may like that as a Meta shareholder because they basically just got free shares of AMD. But what the hell?
Well, that's what AMD has to do to get business because they're inferior to NVIDIA. And so
they gave away 10% of the company.
Yeah, I wouldn't have done that, but that's like we've done the analysis comparing an AMD chip to NVIDIA. It's like day and night. So, they're not competitive. They've never been competitive with NVIDIA. They've always been a second tier chip company. And if I want to build GPUs with them, I'm accepting a lesser product essentially. And so why would you do that? So everybody's trying to spread the wealth and do all this stuff. But I think, if you look at a company like CoreWeave, which is probably like the epicenter of where people don't like it, where it's like people invest in CoreWeave turns around, buys the chips, then they build a data center and then they rent it out basically the same people, right? But, you have to understand it's actually quite smart. I'll give you an example of my company. When we were starting, we needed money and we talked to LPL. We moved our business there and we said, hey, look, and they said, look, we have a forgivable loan program. We'll give you XYZ if you guys do XYZ. Now, it's smart for them to give us money because we've grown to be 20 times bigger things with their help. It helps. And so you can say, oh, they're just giving money to the same RIAs that come back and pay them. Well, that's true. But it's also now we're 20 times bigger. So it's a huge win for them. Whatever they gave us, they're making back way more. You know what I mean?
Yeah.
And so I think that's part of the calculus. It's like, if we invest in this ecosystem and we build it, and these companies succeed, what NVIDIA's business is going to look like in 10 years will be way more than if they just are selfish and they keep all the money for themselves and pay it all to shareholders and pay dividends and do all this shit. All these companies might struggle a lot more and then they have better customers in the future, So it's smart business. You see it all over the place. Almost every industry does this where they try to support the businesses that will help them get more business down the line.
But does the increase in market cap that was based on some of these things immediately make sense? It took years for your business to grow. Well,
if you want sense, you do not trade the stock market. Okay. You trade in the stock market because that there isn't sense in certain areas and there's opportunity for you to make money. So there's opportunity for you to lose money too. You see what I'm saying?
Yeah.
And so nobody forces you to buy CoreWeave. You know what I mean? And I looked at CoreWeave 3 or 4 times and I actually still think it's a good company, but I don't own it because I don't like the economics of investing, let's say, $50 billion into NVIDIA technology today to build data centers. Then I've got to depreciate over, let's say, 6 to 10 years. And then I have to get all this revenue into the future, which I'm sure they'll get, but it's so uncertain. It's like, how do you draw out the numbers, And so that's my issue with CoreWeave. How much business are they going to get in the future? I don't know. It could be tons. I don't know. I know the demand is off the charts, but do I want older chips or do I want to diversify into different layers of different chips? I don't know. So there's a lot of people doing a lot of things and some of it's not going to work for sure. But I think Zuckerberg said, I would rather overinvest. I would rather lose money on some of this than not be in the game because the game's over already. You get that, right?
Right.
These are household names now. Gemini, Claude, Chat. My kids talk about Chat, you see what I'm saying?
Yeah. Well,
so if they didn't do this.
But what's interesting, Ross, is we don't know who's actually come out. And one of the things I wanted to mention is that
they won already. The game's over already.
OpenAI has pledged so much money to so many companies on the come. That one in particular, right?
Well, Sam Altman's a little bit crazy, yeah.
Yeah. And the question is, are they going to be the winner in 5 years from now, 2 years from now, 10 years from now, whatever the number is, when the rooster comes to crow and has to pay up.
Well, remember
money.
who started the internet? We started this podcast. I was talking about AOL.
Right.
Where's AOL today?
Yep.
I still use it actually.
Yep. You? For what?
Yeah, I have my email. I have an email, an AOL address, and I keep it because it makes me happy. Because it's I was the first person on the internet. I was like Al Gore.
You and Al Gore together, huh? Emailing back and forth.
Me and Al Gore.
Yeah.
I have the first AOL address. Like I take pride in my AOL. That said, AOL is not the leader in the internet today. So will OpenAI be the leader of AI in like 30 years? I have no idea. And if you are an investor, it would probably be a mistake not to invest in these companies right now. Like we don't know who's going to win. I'm a big investor in Google. I think Google wins here. I'm an investor in Microsoft. I think they win here. I love that Google owns part of Anthropic. I would invest in Anthropic. I would invest in OpenAI.
Yeah,
I mean, see what I'm saying?
That's where you got Microsoft, and then you got Amazon too, of course, opening.
Right now, do I want to buy OpenAI at $680 billion? No, I don't.
Right,
but like, it doesn't change that it's not a good company, know. But like, as I said, I think the hyperscalers have already won. If I want to be a startup AI large language model and compete against any of these models, like how much money do I have to invest? Like hundreds of billions. So the game's over. And so these companies knew that if they didn't go all in, they had good cards. If they didn't go all in, there's very potential possibility that a third party that they don't know could have come and eaten their lunch.
Yeah.
And so this is the cost of the moat. It's the cost of the moat is $150 billion a year. And, I think they're smart. I think that the way the world will look 5 years from now is extremely different than what any of us can imagine.
Well, that's pretty cool. Let me ask you this on the end.
I wish I could tell you what that is.
I understand.
I'm not sure.
I'm going to ask you something that's a little bit shorter term as a closing question. And recognizing that we said last week we wouldn't know what's happened this week we're not going to know what happens next week. But 6 months from now, what will investors wish they had been paying more attention to today? I mean, is it? I'm going to beat around a few things. The price of fuel, maybe the fact that we have a new. The fact that the Fed is a new Fed's coming in, and that's going to be very theoretically dovish. I don't know. Is it?
I don't know if they're going to be dovish.
Is it the NVDA comment from a couple of days ago about not spending any more on OpenAI? Is it? How about this private credit?
Well, it's funny because I do a lot of these shows and I get asked a lot of the same questions. So, private credit is just junk bonds that rich people bought that suck and they lose money. And that's that, it's not going to infect the market because people in the market don't own it. It's just rich people. So rich people like losing money on high fee products, and I'm all for it. If that's what they want to do.
To talk about
they
it
could just call
club.
me and I tell them not to buy it. You know what I mean?
We've been trying to get some clients out of it that we adopted some stuff for.
It's hard. It's hard to get out of the stuff. That's why we don't sell it to people, because my theory is how, I start with like, how do I get my money back? When the private credit guys come and the VC guys and the hedge fund guys come in and pitch me, I'm always like, well, how do I get my money back? And they're like, oh, nobody ever gets their money back. It's like, what?
And Ross, why do they always come in with two people in the office?
Well, they always come with two people.
Right. Am I right? It's always two.
No, you're totally right. And I always pose the same question to them. We manage the client. It's a lot of effort to get the client, manage the client, get their assets under management, make them happy, service the client. And then they come to us with a 2 and 20 product.
Yeah.
And they go, well, I'm charging 75 basis points.
Yep.
And you want me to pay you 2 and 20 to buy a bunch of junk bonds.
Right.
And it's like, no, why should you make 4% off my clients? So you're buying garbage at 12% and you're paying them 8 and 9. You know what I mean?
Yeah, it's like a recycling machine.
Garbage.
It's like a pay for recycling machine.
So we don't do that here at GK. We just don't do it. Every year, like even this year, all these guys come in and then, guys in my firm are like, they see all this stuff and they're like, shouldn't we be offering all this stuff? Ross, why are you so stubborn? And I said, you know why? Because when these things go bad, everybody hates you. And so I've protected you multiple times through multiple cycles of garbage products that are pitched to us, because I'm fortunately old enough to have seen many cycles of garbage products being pitched, including ones that caused the financial crisis for that matter.
Yeah, it's funny because private credit always seemed to me to be the crap that already nobody wanted to buy, that's being bought up by the people that already, and if everything's fine, okay, it all goes good because they don't market, they just kind of let it sit.
Or rates go down.
Yeah, or rates go down or something like that. Then they can market to whoever they want. Then they don't have to remarket until some other deal, and they can do side pocketing. And then in the end, though, those are the ones that are going to have the worst problem because of liquidity issues, and they have liquidity issues is why we have liquidity issues, right, to begin with. Well,
right, and like if I give you $1,000 as a loan and you're going to pay me 10%, it's not bad credit if you just pay me back. So, what I was saying the other day is that if you're looking to, deploy capital, let's say $50 million into private credit, that's probably pretty easy to do and you could hold out for good companies. But if you're looking to deploy $1 billion, you start to have to go down to the bottom of the barrel here to find investments, or else you don't get paid. So much money goes into the sector, but how many high quality private companies really exist, and private companies are really tough to invest in. You can't get your money out easy. And, what's your exit strategy? Is them going public or borrowing from somebody else to pay you back, I guess. Right. So, there's a lot of people that don't want to do the hard work we do at GK, like getting and managing clients, and they rather just sell products to our clients. And that's why we don't let them in, is because it's like you lose the money. I'm the one that has to deal with it, and I lose a client and you still got paid the whole way.
Right. Right. So we don't have that here. It's not a problem for me. And as I tell most people, I love liquidity, I learned this lesson. I mean, it's like, how old do you have to be before you just learn lessons? And one lesson that is constant is when things go bad, liquidity is a massive premium. You know what I mean? It's like, it's great to have liquidity because you can actually take action when things get bad. Like you can now buy this private credit at 15 cents on the dollar. And there's and when things go bad, it's not like, let's do a redo. Let's have a second chance. Oh, maybe let me go backwards a minute. You're in it. You're in it. That's right. Once you're in the quicksand, you can't get out. It's real hard to tell clients, they wrote a $100,000 check for Blue Owl Fund 7. Yep. And then you say it's all gone. Thank you. But it's really hard to do that. And I'm glad I've never had to do that. I agree. Ross Gerber Kawasaki, always a pleasure to have you on the show. Appreciate you. We're going to have all the information on how to get in touch with you on the disciplinedinvestor.com episode notes for number 963. Thanks, buddy. Wow. Yeah. Thank you. All right. Thanks for having me. And that's going to wrap up this episode of the Disciplined Investor Podcast. That was awesome. I mean, Ross Gerber, we seem to hit it off really well, and I really enjoyed that conversation. So if you did too, send me a note, drop me a line, go over to thedisciplinedinvestor.com, click on the Ask Andrew button to contact us, find somewhere, something to click, send me a note, tell me what you think. I appreciate all the good feedback. I'll take the bad feedback and read it, but then probably toss it. But nonetheless, I like your feedback any way you want to send it. Thanks for joining me this week and every week. Next week coming up, we got a great guest. We got Thomas Petterfy. He is the founder. He is the guy that created. He is the current one in charge of Interactive Brokers, and quite a history and something that I'm going to enjoy. I've never really had the opportunity to speak with him before, but this is going to be a great episode. Make sure to be there next week when we bring him on. Thanks for joining me this week and every week. I'll see you again real soon. This podcast is intended for informational purposes only and does not constitute personalized investment advice. Investing involves risk, including the possible loss of principal, and past performance is not indicative of future results. The views and opinions expressed are those of the host and any guests and may not necessarily reflect those of Horowitz & Company, Inc., an investment advisor registered with the U.S. Securities and Exchange Commission. Registration with the SEC does not imply a certain level of training or skill. Advisory services are only offered to a client or prospective clients where Horowitz & Company is properly registered or is excluded from registration requirements. Any mention of third-party companies, products, or services is provided for informational purposes only and does not constitute an endorsement. Hypothetical scenarios or forward-looking statements are for illustrative purposes and should not be viewed as guarantees. Content is intended for U.S. residents only and may not be applicable in other jurisdictions. Listeners should consult a qualified financial advisor before making any investment decisions. Please visit our website for additional information, disclosures, as well as a copy of our Form CRS. Advertisements are not related to the host or affiliates and are not considered recommendations by the host of the show or any affiliates of Horowitz & Company.